Hello and welcome to The View from Sibos. I'm here with Mike Klim, Head of Transaction Banking Financial Institutions with ANZ. Thanks for joining us today.
Thank you for having me.
No problem. So just to start off with, I just wanted to ask around, there's been the issuing of the digital banking licenses for the first time in Australia, and just wanted to see how the incumbent banks are dealing with this new arrival of these banks.
Sure. So actually there's been a few new digital banks stood up recently in Australia. Most of them are focusing on your, pretty basic transactional and deposit requirements at the moment, and a lot of them are focusing, in on specific segments of the population, if you like. The Australian banks, so how are we reacting to it? You can look at it in two different ways. Segments of our organisation see it obviously as a competitive threat, which means we've got to get better at what we do, frankly. So it means we've got to be more convenient for our customers, more transparent. We've got to move things faster, at the end of the day, and do it at the right price as well, right? So I guess that's one reaction. The other reaction is, we see opportunity in there as well. So from an opportunity perspective, being a financial institutions banker, there's an obvious opportunity there for us to bank these new digital banks and capture that flow for our own operational throughput. So there's actually an upside there, and then there's the potential to partner with them as well. So if their services are frankly, if they're better than ours and that's what our customer wants, well, there's a potential opportunity for us to work with them.
Great. And then recently in Australia, there's been the Royal Commission, and it's been 6 months now since the findings of that, and it's really been something that's shaken up the banking sector in Australia. So how are the banks now readjusting to this new climate?
Well, the Royal Commission, it's led to a lot of reflection and a lot of focus within the industry around, not just what we do, but how we do it for our customers, and making sure that the outcomes that we're delivering to our customer is in the best interest of the customer, which means being a lot more transparent. And there's a lot more to it than just the behaviours, right? And there's a lot of actions happening in the background that our CEO Shane Elliott has announced a plan to the market. But if I'm generalising and I'm boiling it down, it's really about being transparent and fair with your customer and making sure that you're delivering the best outcome for them. And if I'm drawing parallels to that, given we're at Sibos into correspondent banking, traditionally there's been a lot of rebate arrangements between correspondent banks, FX sharing, and if you draw parallels back to the digital question that we were just talking about, really, we've got to get better, more transparent, deliver the best outcome for the customer. So we've been working for the last couple of years at ANZ to eliminate rebate arrangements, FX sharing and what have you, well ahead of a lot of the regulatory pressure to do that, because ultimately if we want to compete with the non-bank sector that can deliver things fast, cheaply, in a really convenient fashion, well actually it's a competitive positioning as well as doing the right thing by the customer.
Sure. And looking out to Asia more broadly, there's a huge gap in terms of trade financing for SMEs, for smaller companies. What is being done to try and address that and bridge the gap?
I think there's quite a lot happening to bridge the gap. I'll probably just zero in on a couple of things. I think one of the challenges in trade is it's still pretty archaic. Everything is paper-based still. So moving wads of paper around the world from a trade finance perspective. So it's challenging, it's difficult. Bringing in new entrants to it, there's quite significant operational barriers in dealing with that paper and moving it around. I think the digitisation of trade, so a lot of the projects like the Hong Kong Monetary Authority's project and the Monetary Authority of Singapore's project around their national trade platforms to digitise trade, will longer term also have the benefit of supporting SMEs, because it's really, the large institutional players that have the money to invest in their own, if you like, bilateral digital systems to bring that efficiency, whereas standing up a platform that's going to benefit small business, I think will help immensely, and also help eliminate some fraud and give a bit more confidence to bring finance to the sector. But ultimately, I think, one of the biggest things that needs to happen to address that trade finance gap is really attracting non-bank capital to the sector. So a greater diversity of risk appetite, greater diversity of capital. And I think there's a number of projects happening in Asia at the moment, out of Singapore specifically, for digital distribution channels for trade assets. And I think that in itself will help attract a lot more non-bank capital to the sector to help us close that trade finance gap.
Okay, well, that's great. Thanks so much for being with us today, and enjoy the rest of your time at Sibos.
Thank you.
Thank you.